Hi, my name is Eric Martineau and this is my lovely wife, Diane. We are co-owners of the website reversemortgagehomes.com, which is part of Nexa Mortgage. We are the largest wholesale broker in the nation of mortgages. We have over 10 reverse mortgage companies that we can work with depending on your specific needs. So what we want to talk about today is what makes a reverse mortgage a safe financial tool. First of all, let's talk about the history of the reverse mortgage. The reverse mortgage was created in 1961, and it was designed to provide seniors, those that are 62 years and older, with home stability, also financial security, and finally, peace of mind. There were some misconceptions about the reverse mortgage, what it is, how it works. And most of these arose in the 1980s, before the U.S. Department of Housing and Urban Development, HUD, began monitoring and regulating their use. Let's talk about some of the myths. One myth about reverse mortgages is that you might end up losing your home. This is not true. The bank does not take ownership of your home, right? Just because you get a reverse mortgage. Now, just like any other loan, you have to satisfy certain prerequisites with that loan, like paying your property taxes or paying your homeowner's insurance. Now, this shouldn't come to a surprise to any of us that have owned homes for most of our lives, right? We pay our taxes, we pay our homeowner's insurance. And we also, with these loans, must occupy the property. This must be our primary residence. So, unlike an investment property that you could own, this must be, and you don't live in it. With these properties, you must have it. And if you do, you will retain ownership of your home. Another myth that sometimes pops up is that you might actually end up owing more money than what your home is actually worth. And that's what some people are afraid of. All right, so here's the fact about a home equity conversion mortgage. That's what we call them. Sometimes you'll hear us loan officers call it a HECM. A HECM is a non-recourse loan secured with federal insurance. What does that mean? It means that even if the loan balance were to exceed the value of the home, you have federal insurance there to cover the difference. Another myth, your heirs will lose all their inheritance. This isn't true. When your reverse mortgage, or HECM, matures in the future, your heirs can choose whether to sell the home or refinance it. They're given that option. Your heirs will inherit all of the remaining equity in the home too. And since homes commonly appreciate, right, you have a very good chance that there will be extra equity in the home for your heirs. Your family can also refinance the home and keep it in the family. Another myth is that if you have an existing mortgage, you will not qualify for a reverse mortgage. The fact is, even if you have an existing mortgage on your home, if there's enough equity in it, then yes, you can get a reverse mortgage. In fact, many borrowers love the fact that they're going to get a reverse mortgage because it pays off the existing mortgage. Thus, the funds that were going to pay your mortgage, now you can use those funds to go someplace else. A very, very important thing for many people that are on a fixed income. So what is it that makes a reverse mortgage such an ethical and safe tool for seniors? First of all, the federal insurance. In 1987, the Federal Housing Administration authorized federal insurance for reverse mortgages. That federal insurance guarantees to the borrower that they will have funds available to them as they age. In other words, you can't outlive these loans. You will continue to get that monthly payment until you pass away. Well, what happens if you outlive what they estimated you should live? They being the mortgage calculators, right? Well, it also assures the lender that they will be compensated for the difference between the value of your home when you pass and what you might owe if the amount that you owe exceeds the value of the home. There's insurance there to take care of them. But like I just said, usually your home will have appreciated and there'll still be equity there. But just in case, you don't have to worry about it. Another reason why the reverse mortgage is such a powerful, ethical, and safe tool for seniors is because these loans are non-recourse loans. This means that the only collateral on your home is the home itself to pay back that note, right? So if in fact you outlive the estimate of how long you will live, right, and your home is worth less than the amount of money they've given you over the course of that loan, then they have insurance there to make up the difference. And that loan is the only thing. So they're not going to be coming after your heirs to pay for you living too long, if that makes any sense. Another reason why the reverse mortgage is such a powerful, ethical, and safe loan for seniors is that HUD has put together consultations, and these are called required financial consultations. Anyone who gets a reverse mortgage needs to go through one of these HUD-approved agencies for a consultation. This is to protect you. This is a third party that will sit down with you and explain the loan that you're getting so that there's no confusion and so that there's no loan officer out there trying to take advantage of you. This was a safety net that the government has placed to make sure that seniors are not taken advantage of in their older years. By consulting with a HUD-approved agency, this means that the potential borrower is therefore able to receive unbiased financial consultation from an independent advisor other than the loan officer that they're working with. And then during these sessions, right, a trained advisor will help the borrower understand the features of the reverse mortgage that they're getting. Another wonderful reason why the reverse mortgage is an ethical and safe option for seniors is the lifetime reverse mortgage. In 1991, HUD regulations made a reverse mortgage insurance available. I've talked about this in the past. Well, what this allowed was for lenders to offer you a lifetime reverse mortgage program. In other words, you didn't have to worry that you outlived your reverse mortgage and all of a sudden at age 85 or 90, you have to go and get rid of your house and move out of it because the bank's taking over. In other words, you can stay in there until you pass away. And if you outlive the projections of how long the average person lives nowadays, right, and there's more owed at the end of your life than what the mortgage is, guess what? There's insurance there to take care of those extra years. So you never have to worry about losing your home to a bank. Powerful. Again, we have to caveat this. To obtain a monthly payment for life, you have to do a couple things. And it shouldn't be surprising to any of us that have owned a home in the past, right? It has to be your permanent residence, so it's your primary residence. You have to continue paying property tax and homeowners insurance. I don't know why that would surprise any of us, but we pay our property taxes, we pay our homeowners insurance, and we have to do basic maintenance on our home. Again, this shouldn't surprise anyone that gets any kind of loan because we're expected to do those things, right? Then the lender will then set a specific amount of money as a line of credit, and the borrower may outlive that amount of money, like I said, but it doesn't matter. They're not going to owe anything, nor are there heirs, because there's insurance there to take care of that eventuality, if that were to happen. Another reason why a reverse mortgage is such a powerful, ethical, and safe product is the limits on rates and fees. The AARP and the National Reverse Mortgage Lenders Association approved putting limits on the origination fees that lenders can charge. And then they passed those on to Congress, and Congress approved them in 2000. So reverse mortgage rates and fees are now regulated and controlled by Congress. In fact, the reverse mortgage formula for determining origination fees was determined by Congress. This guarantees that there's no excess fees in a reverse mortgage. And then what we call TILA, which is the Federal Truth in Lending Act, requires all lenders to divulge the terms and costs of a loan, such as an APR, right? And what's available in your line of credit. All of that has to be divulged. Another reason why a reverse mortgage is so powerful and strong and safe for seniors is reverse mortgage exams. As I've already mentioned, anyone who gets a reverse mortgage needs an advisor to sit down with them to explain it, a third-party advisor certified through a HUD agency to advise them on this, not just the loan officer. And now there's an exam. The exam was created in the year 2000, and in that same year, over 425 advisors in 43 states took that national test. So they will be able to sit down and explain the basics of a reverse mortgage to you as a third party, not the lender themselves. And again, this is required by law to protect our seniors. And this exam was the first official nationwide reverse mortgage financial counseling exam, right? Designed to help counselors, and again, these counselors have to be certified through a HUD agency in assisting applicants to understand the ins and outs of a reverse mortgage. Again, by a third party, not just what their lender explains to them. Just another level of safety and protection for our seniors. Another reason why the reverse mortgage is such an ethical and safe tool for seniors is what's called the Reverse Mortgage for Purchase program. In 2009, HUD introduced an FHA Reverse Mortgage for Purchase program. A lot of people think you had to already have your home and have equity in it. You can actually move from the northern states down to a southern state, sell your home, and not have to use all your capital to get a new home. This program was created by Congress to help seniors transition to a home that better suits their changing needs, thus cutting their costs and streamlining everything into one transaction. Another reason why the reverse mortgage is such an ethical and safe tool for seniors is that the non-borrowing spouse has rights. That's correct. In 2014, HUD announced new rules regarding the non-borrowing spouse for loans. As far as any loan, any reverse mortgage after August 4th, 2014 allows the non-borrowing spouse to remain in the home even after the borrowing spouse has passed away.